This next interview is a very interesting story with Richard Pilkington, who's the Senior Vice President and Managing Director of the Oxford Properties Group, a Canadian company which basically came to London with £3.5 billion to invest in commercial and retail projects over 3 years. That's an incredible story. Tell me about how you came to London with all this money.
Okay. The story goes back probably 5 years. And if we go back 5 years, 2008, the Canadian pension funds have had particularly the Almost Pension Fund, of which Oxford is a part of, had a growth plan, and that growth plan was really fueled by, their increasing amounts of capital that's coming in as a result of domestic pension contributions. Being long in the Canadian market and deep in that market, there's a need for a level of diversity. And that diversity needed to come geographically, and also it needed to come from a view of what they would term as capital allocation, whether that be to the public markets or the private markets. So, as a result of the public markets having a lower sort of level of return on a long-term average, there's been a bias to move more of the capital to the private markets. So, as a result of that, Oxford was really the recipient of a challenge, if you like, to move its business from a $15 billion business to a $30 billion business over 5 years. The plan provided the opportunity for $5 billion for further capital to be invested into Canada, and $5 billion to be invested into the US, $5 billion effectively equating to £3.5 billion to be allocated here in the UK. So our executive vice president Paul Brundage came to the UK in 2008. Very challenging time, around about the time that Lehman's had filed for bankruptcy, and really spent the first 2 years fact finding, understanding the market, and considering whether this was the right place to put Canadian pension fund money. So our story probably starts more in earnest 3 years ago. Paul started to assemble a team 3 years ago. I joined that team then, and we've built our business from 2 or 3 people in 2010 to we have about 21 people in London now, which is small relative to our 1,300 people in Canada. But during that time, we've been able to access the market here, and we have committed around about $3 billion of that $5 billion plan. That's partly in core assets, just pure income producing property, but again, central London property, but also in developments. And our developments we have accessed so far through joint ventures, such as our joint venture with British Land for the Leadenhall Building. We also entered into a joint venture with Brookfield, another Canadian company, last year to do a large 500,000 square foot development in the city, London Wall Place. And we have just completed the signing of a joint venture agreement with the Crown Estate to develop a 250,000 square foot office building in the West End of London. So it's been a real growth story for the past 3 years, and we see that continuing for the foreseeable future.
One of our missions here, of course, is to talk about tall buildings and super tall buildings. What kinds of properties are attractive to you?
I mean, if you look at it was interesting. I showed a slide this morning in the plenary session, which gave Oxford in the context of tall buildings. And naturally, with a North American base, we have a large portfolio of those tall buildings. I think the opportunity here for us has been to bring some of that knowledge and expertise to the joint venture with British Land in the Leadenhall Building. And I think that we were attracted to that for the fact that, particularly because of its market location, its ability to take on board, it is really ground zero in the insurance district. So I guess our attraction there has been to the ability of that building to respond to the occupier market. London is challenging in relation to tall buildings. You have the cluster, you have odd buildings sitting elsewhere. It isn't an easy city to develop those tall buildings in. And I think we will continue to be focused on those opportunities in the right areas, such as the insurance district. Elsewhere, I guess we're relatively constrained by planning in any event. So our focus will continue where it makes sense to look at tall buildings, but will be complemented by lower rise buildings which meet the needs of the planning constraints.
I'll just ask you a last question. There have been so many super tall projects that have dried up due to a lack of financing or financing problems. I don't know if the nature of that has really changed with all of the building going on in Asia over the last 10 years or so, but would a super tall building, 1,500, 2,000 feet, be something that would even be considered for an investment? And if so, what conditions would have to be, how would you do it?
I think that would be, I would suspect that would be a bridge too far from our perspective. We're not we have, if you take our operation in New York, New York doesn't have those sort of height restrictions, but the nature of the occupier market would just make that just too risky in terms of the return on your investment. I think the smart money really is in the appropriately sized buildings. You see a lot of buildings now at probably 50 to 60 stories. Those are the ones that can be delivered over a 2-3 year timetable. You can arguably lease up 600,000 square feet over a time. You can lease up 1.2 million square feet, as we're seeing happening in New York. Buildings that get bigger than that, or have ambitions bigger than that, face big challenges. We have, the Pinnacle face some big challenges here. It's a very large building. And also, Brookfield's 100 Bishopsgate faces significant challenges. It's 800,000 square feet. These buildings need pre-lets, and without those, third-party finance isn't available, and for developers to take that forward with their own equity is probably a step too far, and I think would be a step too far from our perspective.
Richard Pilkington with the Oxford Properties Group, a fascinating story. Thanks for coming to see us.
Thank you.